Euro is the currency you should be watching for the next 72 hours, so pretty much until the end of the week. Right now, we're seeing a little bit of stabilization in the euro, but it's definitely looking tenuous. And the reason for that is because despite the fact that the euro seems to have found a bit of support above 110, we have a lot of risks ahead for the euro in the next few days. Taking a step back before we get into the economic reports and the data that could move the euro has been very weak, and the reason why investors have been selling the currency is because there is quite a bit of concern that the eurozone could fall into, or more specifically, Germany could fall into recession in the third quarter. The second quarter saw Germany contract for the first time in a while, and the Bundesbank today, which is Germany's central bank, said that there's a very good chance that the third quarter growth was negative as well. And if that happens, that would put Germany into a technical recession. Now, investors aren't too worried because the government has been relatively proactive in saying that they're preparing fiscal stimulus in the case that Germany does fall into recession. But even if they do come out with a fiscal stimulus measure, first of all, we don't know if they're going to deliver fiscal stimulus on a mere technical recession or they're going to wait for a deeper contraction in growth. If they do deliver stimulus, it is something that is, coming against the general trends of softer economic conditions in the eurozone, and so they're fighting kind of a downhill battle, which investors are very worried about because they don't necessarily think that it's going to be enough. So that's the kind of backdrop of the euro right now, and it's important because we start the next few days with the eurozone PMI numbers. Eurozone PMIs are the most important piece of data from the region this week, and there's a good chance those numbers are going to be weak because we saw softness in investor confidence and business conditions as well as industrial production. So all signs point to a possible contraction in activity across the eurozone that could accelerate or cause the euro to resume its slide. Now, if we were living in a vacuum, we're just focusing on eurozone data, the currency should be trading lower. But in the next 72 hours, we've got the PMIs from the eurozone, along with the Fed minutes on Wednesday, and Fed Chairman Jerome Powell speaking at the Jackson Hole Summit on Friday. Now, the Federal Reserve is widely expected to lower interest rates in September. When they met last time, they were not significantly dovish. So investors will be looking into the FOMC minutes to see if the relatively optimistic tone or the bright spots that Jerome Powell pointed to is kind of echoed throughout the FOMC minutes. If there's a positive tone in the Fed minutes, the dollar will extend its gains, pushing euro lower. However, if central bankers raise some red flags and sound a bit more dovish, then we could see an extended recovery in the euro. Because at the end of the day, while the eurozone PMIs are important, the Fed's stance is what the market really wants to hear this week. So aside from the FOMC minutes, we also have Jay Powell's speech on Friday. And so far, we haven't heard excessively dovish comments from U.S. policymakers. So Fed guidance, in many ways, is misaligned with market expectations for easing. Because aside from the rate cut expected in September, the market's pricing in an additional 25 basis points before the end of the year. So if the Federal Reserve is committed or open or seriously considering the idea of lowering interest rates in September, then we expect to hear dovish comments, more pessimism from the Fed and Fed officials in general, including the Fed chairman on Friday. So a lot is going on that will affect the euro, which is single-handedly the most actively traded currency. So expect some more extended volatility and explosive moves in the next 72 hours.